US President Donald Trump's new 25% tariffs on imports from Mexico and Canada took effect today. Washington has also imposed an additional 20% tariff on goods from China. Trump's actions have launched new trade conflicts with America's top three trading partners. China, Canada and Mexico, however, have not taken the higher tariffs lying down. Beijing swiftly retaliated against Washington's move, announcing hikes to import levies covering $21 billion worth of American agricultural and food products. This tariff hike is tit for tat, has effectively moved the world's top two economies a step closer towards an all-out trade war. Canada also announced its own 25% levies on $100 billion worth of US goods, while Mexico has also promised to respond. All three of America's top three trade partners are now facing significantly higher barriers than just a few weeks ago. Well, stocks in Asia opened mostly lower on Tuesday on fears of the implications of Donald Trump's tariffs on key trading partners, and not surprisingly, they ended the session in the red. The Nikkei share average declined by 1.2%. The Hang Seng Index closed down by 0.3%, while the Shanghai Composite Index actually bucked the trend, ending up 0.22%. US markets continue to take a beating as the Trump administration confirmed the implementation of tariffs, fueling economic uncertainty. The tariffs, which include a 25% duty on imports from Mexico and Canada, are set to take effect from today, alongside an additional 10% tariff on Chinese goods. That follows a 10% increase on Chinese goods at the beginning of February. And already concerns over the US economy are deepening as factory prices have surged, while supply chain delays have also worsened. The Dow Jones Industrial Average declined by 1.5%. The S&P 500 lost 1.76%, while the tech-heavy Nasdaq plunged by 2.64%. In terms of the local indicators, the JSE also is in the red, taking its cue from global markets. The all-share index falling by 0.5%. The rand is trading at 18.58 against the US dollar, 19.55 vis-a-vis the euro, and 23.64 against the British pound. All of them trading lower against all of those major currencies there. Gold is trading at $2,920 an ounce, platinum at $957 an ounce, while Brent crude oil is trading at $70.57 a barrel. Well, for more on the impact of the trade tariffs, I'm joined by Xhanti Payi. He's an economist at PwC. Thank you so much, Xhanti, for joining us. So, with trading partners deciding to retaliate against the US higher tariff moves, how consequential is this? How soon are we going to see this translate into higher inflation?
This is quite consequential, and this, it really depends, I guess, on the administration and how effective that administration is. One expects that, these tariffs don't actually probably apply almost immediately. So one would think that it would be something that that happens pretty quickly, depending on the systems that are being implemented in this regard. But I guess it's important to say that these ones have been effective, I guess from, they said from midnight US time, so that would have been something that's there. So I would say that that's something that's quite immediate. But in terms of seeing the inflation itself, that is something that we probably will see it as it translates through the pricing process. And that is usually difficult to tell. It could be anything from a month from now to 18 months. That transmission mechanism is pretty unpredictable.
All right. So in the absence of higher tariffs against South Africa, presumably as a country will still be adversely affected by higher tariffs, because it will mean some of the inputs that we import will have been elevated in cost because other countries are now subject to these higher tariffs.
Yes, it's very important, I think, on both sides. So in the first instance, we know that these tariffs, especially as they apply to China, perhaps even Canada, because I was just looking at what we export to these countries, and mainly these are inputs. So if you think about it, for example, to Canada, we export largely gold. We also largely export platinum, and then some citra. So if you think about it, we know that a big use of platinum is in cars. And so if you are thinking about actually the motor vehicles that are being created, that is probably going to filter in whatever exports that are sent by Canada to the United States. So that's one area. The second area is probably when we are looking at, and then obviously the prices of gold, depending on what they use that gold for. It's the same with China. So once they manufacture those goods, then they export those goods to the US. It's either they become inflationary in the US or the demand of those goods in the US falls. And of course, if the demand for those goods actually depreciates, it tells us something that obviously then the inputs they need for the goods is actually also going to fall, because obviously they are not exporting as much as they should. So that's an important part in terms of actually how this comes through, is that we see inflation in the US, but we also see the demand in terms of what we export to these countries, depending on how the US consumer either absorbs this cost or the producer obviously has less demand on their goods.
Xhanti, from your assessment as an economist, is this a zero-sum game?
It's never a zero-sum game. There are certainly there are certainly losers. First losers are, in terms of tariff hikes, is usually the consumer, because as we know, the price is paid by the consumer. Remember, the producer makes the goods and then they export them. When they arrive at the border, so if, for example, in South Africa, we increase tariffs on anything that we import, say we import wheat, at the border, where it's supposed to come into South Africa by, whether it's by ship, we then add the tariff, and then by the time it comes to the hands of the consumer, it is now priced higher, because whoever has actually sold it to us would have not paid that tariff. So the first loser is usually the consumer having to pay a higher price. The second loser, of course, can be the producer or the people that are employed in the production, because South Africans, for example, because the price has increased, we may say we don't want to buy those goods anymore. Let's look for goods that are maybe locally produced, and that may be true of the US as well, where they may say, the consumers in the US may say, look, these goods that have tariffs, we actually are not longer going to buy them. And so when that happens, then those goods obviously are not manufactured. And if we were part of that manufacturing process of that, or those exports that were part of those goods, then of course those jobs are lost. So certainly the first loser becomes the consumer, and then it moves then through the value chain, finally affecting whoever has been part of the production process.
Yeah. Xhanti, before I let you go, as you heard at the top of our show, we're talking about the GDP number, that coming out at 0.6%, an increase of 0.6% in the fourth quarter, and for the total year, 0.6% of 2024. What's your reaction to these numbers? And of course, they're quite pitiful, aren't they? Given that, population growth is running at about 1.5%. This means we have a lower GDP per capita, not looking good at all. Are you hopeful about this year, 2025? Lots of questions in there.
Lots of questions. Certainly one of the things we expected. So it's in line with really with our own expectations. The important thing to recognize is that we have had a very difficult year last year. Now, one of the things we're very happy about was that we didn't have load shedding. But we also know that, it takes a while for people to trust the system, for the consumer and both the producer confidence or the business confidence to rise, and for people to trust that they can invest. And so that was one of the key things that we saw last year. We saw that decline in growth. But I think the second part is also that we have had a situation now this year where we have these new headwinds that we are talking about. And so even though we were looking for a recovery, we're now looking at headwinds. We've just talked now about, for example, these tariffs that can disrupt trade. And that is something that is likely to affect us. So especially on the commodity side, but also on the export side, as we're actually trying to work out through this. And many investors are going to also hold back a little bit and say, can we watch this thing? How are the impacts going to affect South Africa? And anytime people hold back investment, anytime people hold back production because they're trying to see how things are going to look out, that affects the growth and the growth outlook. So that's really a big concern now, is that the risks in the system is there. And also, obviously, we were also hoping this year for lower interest rates. that may not actually happen, and those lower interest rates may also, those relatively higher interest rates than what we expected in terms of the cuts may also affect us in terms of the growth trajectory. So unfortunately, in terms of this, is sort of wearing down some of the optimism that we had for this coming year.
Xhanti, thank you very much for your time and your insights. That was Xhanti Payi. He's an economist at PwC.